Have you ever wondered why price suddenly moves with no warning? Today, we're diving deep into liquidity voids, the secret weapon of smart money traders. I'm Wendell from Spektrades, and in this video, I'll show you how to spot and trade these gaps for explosive market moves. By the end, you'll know how to use liquidity voids to find high probability setups and trade with precision. Without further ado, let's jump right into this video. Orders absorbing liquidity. Smart money pushes price rapidly to create these imbalances. Some key characteristics is that they appear as large, clean candles with little consolidation, so they often occur after major news events or during session overlaps. The main reason they matter is that price often retraces to fill these gaps, creating predictable, probable setup. As you guys can see right here, price was once giving us this accumulation rally right here, creating liquidity above and below this rally right here. Then around 8:30 a.m. news, this is when we can see these liquidity voids happen more prominent, right? Around news times or around session news releases or just around volatile price. As you can see around 8:30 a.m. news, that's when the institution is stepped in. That's when we can see that price extend higher and give us this clean bullish candle right here. This is what we call a liquidity void. What we want to see for price to pull back, to either mitigate inside of the liquidity void, to mitigate a certain area, to then extend higher, to come and clear our old highs. We can either see this liquidity void in a bullish format or a bearish format, depending on the trend. Now let's get into how to identify these liquidity voids. Let's get into the steps to identify. The first step is to look for areas of rapid price movements with no pullback. On this clean rally right here, price didn't give us no pullbacks until later price movements to come back to mitigate the void. But this right here shows us a clean side of a liquidity void right here. Price just spike higher without no pullbacks. Number two is to mark the start and the end of the void on your chart. As you guys can see right here, this is the beginning, this first candlestick, and this last candlestick right here is the end. So right in this gap right here is what we call our liquidity void. We want to see price pull back inside of the gap to then extend higher to clear old highs. Next, for number three, is to identify if the void aligns with key zones like session highs or lows or institutional levels. These right here are the three steps to identify your liquidity void. So coming time frames we look for it on is 1 hour, the 4 hour, and the daily charts for swing trading, and 5 minutes and 15 minute charts for intraday trading. So if you are a intraday trader or like a scalper like me, I mainly look for these on the 15 minutes chart, right? The 15 minute charts, and I scale down on the 5 minutes for me to look for my positions. But if you are a swing trader, they're mainly shown on the daily chart, the 4 hour and the 1 hour. A clear pro tip I can give you guys is that liquidity voids near premium and discount zones set up for high probable setups. When you see a liquidity void near a premium or a discount zone, those liquidity voids really set it up for high probable setups. So make sure you guys keep that tip in mind. Now let's get into how to trade the liquidity void. For the liquidity voids, we have two main strategies. We have our retracement strategies. This is where we wait for price to return and fill the void. Then we look for a confirmation, such as a breaker block or an institutional candle. And now for our schematic, as you can see, after price left our liquidity void, price also left this liquidity low right here. As you can see, price plays down lower to give us a liquidity sweep of this old low to then extend higher to come and clear opposing sides of liquidity. This is how we identify our liquidity void. We have to wait for price to show us this impulsive move right here. This impulsive move with no pullbacks or consolidations. This right here sets it up perfectly for price now to come back to mitigate this area to then extend higher right here. Now let's get into how to trade the liquidity void. The two main strategies I use, the retracement entry strategy and the continuation entry strategy. For the retracement entry strategy, we wait for price to return and fill the void first, and then we look for confirmation, such as a breaker block or an institutional candle. Then for our continuation entry is that we have to enter with the momentum of the void if it aligns with a strong trend. So as you can see right here, this chart example use our retracement entry strategy. Price left us this liquidity void marked in orange. As you can see, we want to see price pull back to clear a liquidity low inside of this liquidity void before we start expanding higher to clear old highs. So when price comes back lower to tap inside of our liquidity void, that's when we're going to scale down on the lower time frames to look for a lower time frame price, lower time frame market structure shifts and breakup structures that's going to signal that price has now stopped this downtrend to now rallying higher to give us this uptrend right here to come and clear our old highs. Some key risk management procedures is to place stop loss below the imbalance zones for bullish setups or above the zone for bearish setups, and to always use liquidity targets like swing highs and lows for take profits. As you can see right here, this is our old swing high right here, this buy side liquidity high. So this right here is a clear point of liquidity that we can expand to use for take profits. So as you can see, after the price pulls down, to mitigate this zone right here, price just extend higher to come and clear this old high right here. A psychology tip I can give you guys is to don't chase the move, is to be patient and wait for price to return to the void and fill the void first and scale down to the lower time frame and wait for a lower time frame market structure shifts and breakup structures before you look for an entry, right? Never chase the move, right? If you see a liquidity void, always either catch it during the continuation when price is rallying higher, or wait for price to give you a retracement back inside of this liquidity void before expanding higher or lower. Now let's go over a live chart example on how we trade the liquidity void. And now that we're on the charts, as you guys can see right here, price was once in this uptrend right here. Price was rallying higher and giving us higher highs and higher lows until price started building this range right here, right? Where liquidity was building above and below this internal range liquidity lows right here. So we can see that price pushed down lower. Then we can see that price started this downtrend and giving us lower highs and lower lows to push down lower to come and clear this internal range liquidity low right here. I always like to see a liquidity sweep into my zone right here. So we can see on the 5 minutes, price push down lower and tap inside of this 3-minute order block. This is our 3-minute order block. Price push down lower and give us a liquidity sweep inside of this 3-minute order block. And then we can see around 8:30 a.m. this is when price expand higher to leave this liquidity void right here, right? A lot of early traders, a lot of newbie traders, a lot of new traders, what they want to do is chase price, right? They either gonna buy and sell here to either guess price or chase price. When they see price buy higher, they start buying right here, right? They start buying. They don't wait for a full retracement and more price action before taking that trade. But I'm going to show you guys exactly how we use these liquidity voids to cash trade. So as you can see right here, after price left this 3-minute order block, right, price expand higher during the 8:30 a.m. news. Now we have created a new range from this old low to now this old high right here. Now let's grab my Gann box from the old low right here to the old high. So I want to see price cross equilibrium first, right? Cross equilibrium first before looking to go long. So any zone inside of this discount zone right here is a perfect zone that I want to see a nice reaction happen before price expand higher to come and clear our opposing sides of liquidity. So in this discount zone right here, based on all my previous lesson, right? This is just a quick test. Based on all my previous lessons, what is a clean zone that we can use, I would say, with this liquidity void for us to expand higher? Right? What is a clear zone you can clearly see? I'm gonna give you guys 2 seconds. A clear zone that comes to my mind right now is our breaker block right here, right? Perfect. This was the last bullish candlestick. I'm just gonna use this just because we're on the 3 minutes. I'm just gonna reuse this this whole range right here. But this right here was the last bullish candlestick before price pushed down lower to give us this liquidity sweep and tap inside of our 3-minute order block and then expand higher. So this right here is our breaker block. So this is a clean zone aligned with this liquidity void right here that we can see that price pull back into and use as a zone to then expand higher. Now let's play price and see exactly what it shows us. And now, as you can see, price came down lower and tapped inside of our liquidity void, but it didn't tap inside of our breaker block yet, but it left this old high right here. So I want to see price push down lower to clear this old low and tap inside of this liquidity void before expanding higher. Now let's get down to the lower time frames to see even more price action. And now we are on the 1 minute time frame. As you can see right here, price left this liquidity low right here, but it failed to tap inside of our 5-minute breaker block right here. So I want to place my trade right at the open of this order block and place my stop loss right below the order block. And I'm targeting opposing sides of liquidity, these old highs right here. I always target for either a 122R or a 123R, right? Never get greedy, but always target for a good take profit zone. Now let's play price and see exactly how this trade played out. As you can see, price pushed down lower to come and clear this liquidity low right here. This is where we place our trade, and price pushed down lower and tag us in. Remember, our stop loss is always below the breaker low. We are playing inside of a liquidity void, inside of a breaker block in discount zone. This right here is how you catch high probable setups. Now let's play this trade out and see exactly how this trade played out. And boom, as you guys can see, price pushed down lower to clear this internal range low, tap inside of our breaker block before expanding higher to clear our opposing side highs right here. But this is how you trade liquidity voids. You never rush the move. You always wait for more price action, because price will retrace every single time, right? You never be in a rush. Wait for more price action to develop, and then scale down to the lower time frames for you to find a position and scale in. And also, if you guys want the full framework of liquidity voids in a 3-hour full course, make sure you guys click the first link in the description and join the Spark Trading community and live trade with us and grow with us. If you guys got a lot of value from this video, make sure you guys like, subscribe, and comment down below what you think. This is it. Spektrades out.